Where is the best place to keep money liquid for your business working capital? Now, if you're a business owner or thinking about starting a business, way to go, congratulations. You need to make sure you understand how money works. So the best place to keep your working capital for the use of buying inventory, covering payroll, if you have a tight month or whatever, you're waiting for people to pay for what you just sold them, whatever, is not in a bank, in a checking account, earning Zippo. I keep the majority of my working capital, and my clients do the same, in properly structured, max-funded IUL, because truth be known, if you keep it in a bank, the bank is simply taking 30 to 40% of their tier one assets, your money that you're leaving there in a checking account or a savings account, and they're putting it into insurance companies, increasing the safety by usually 5 or 6 notches higher in safety from triple B to triple A, and they're earning a rate of return 4 to 5 times what they're paying you, or maybe they're not paying you anything. So get ready. In this episode, I'm going to show you the best way to keep your working capital and how you can make tremendous rates of return on your money while you're actually using it in your business. So I'm Doug Andrew, and I've been a financial strategist, retirement planning specialist now for 5 decades, helping thousands of Americans optimize their assets and minimize taxes. Many of my clients are savvy business owners, and they understand this concept. It's amazing how many people don't understand how money works. So when people come to me, oftentimes I will ask them, you have a business, do you have a working capital account where you keep your business money to buy new inventory or to meet payroll if you have a down month or what have you? And most of them, of course, say yes. And I go, well, where is that? Well, it's, they're sort of ashamed sometimes. Well, it's just in the bank or the credit union. What are you getting credited with interest? Nothing. It's just a checking account. Well, how much do you have in there? And they'll say, oh, the average balance is about 200 grand. And I go, oh my heavens. I'll say, well, how much of that 200,000 do you usually have to dip into at any given time? And they'll say, at the most, half. I said, well, so if you had access to 100,000 of that 200,000 within an hour by driving down to the bank on the corner of the credit union to the drive-up window, that gives you peace of mind, right? What about the other half? If you could access all 200,000 within 48 to 72 hours, would that be okay? Oh yeah, most emergencies aren't immediate. Well, I would recommend you do what I do, and you take a portion of your working capital. So let's take 100,000 of that 200,000 and put it into a max-funded indexed universal life where it's earning a rate of return 3 to 4 times what the bank or credit union's paying you. Maybe they're not paying you anything. You might as well put it to work. And let's increase the safety several notches higher. Would you agree? Yeah, I've just never thought of it that way. So we do that. Now, why do they do that? Okay. Now, I have many business owners who have IUL, and they have working capital that they then accumulate inside of their IUL. And they'll have $1 million, $2 million, $5 million or more in an IUL policy or policies that's earmarked as working capital for their business. They do what I do. And so when they need money, they can go withdraw the $1 million out of their IUL, but now it's not in the IUL earning tax-free interest anymore. So they understand how money works. So instead, they borrow from the insurance company the equivalent of their money. Are you getting it? The insurance company will loan them the equivalent of how much money they have sitting there. It would be like going to a bank. A bank will loan you $1 million if you have $1 million sitting there in the bank. But see, banks will charge you a lot of interest for that. With an IUL, it's the opposite. And so the insurance company, without qualifying for the loan or anything, they'll go, sure. And within 48 hours, 72 hours, they'll send you $1 million. you're borrowing technically from the insurance company using the $1 million that you have in your policy as collateral. So that if you default, they have the ability to just take the $1 million in your policy to cover the loan, okay? This is not rocket science. And they agree to pay 2% interest. And if you borrow at 2%, they'll credit you 2%. That's called a zero-wash loan. But most of my business clients, they're savvy. They know how money works. And so they use an indexed or alternate loan. And that's usually a little bit higher interest rate, like 4 or 5%. So let's say they borrow from the insurance company $1 million using the $1 million in their IUL as collateral. And they're going to be borrowing that money at 5%. Why are they willing to do that? Well, they don't have to write out a check for that because most of them, their IUL is averaging 10% or more, like mine. How much more is 10 than 5? Don't say 5. It's 100% more. Let me put it this way. Would you hire an employee for 50 grand that made you an extra 100 grand? I'll do that all day long. That's called 100% return on employment cost. Would you buy a widget machine for 50 grand that made you an extra 100 grand? So they're making a net of 5%. They're still making $50,000 of tax-free interest on their $1 million while they're using it in their business to make money. Are you getting it? Let me show you a real-life example of this. In 2007, I had a savvy business client who understands this, and he uses IUL as a business working capital account. He has a niche where he finds apartment complexes or commercial, strip malls that the owner is sick and tired of being a landlord, and they just want to sell. And so they don't want to take time to fix it up and then sell it. And he has a pool of investors who want to buy fixed up properties. So his niche is not buying and keeping them himself. He buys them, fixes it up, and flips them to his pool of investors. It's a win-win. Have you got it? So in 2017, he called me and said, Doug, I have a strip mall I want to buy for $17 million, and I need $1 million for the earnest money to tie up this property. He said, send me the form. Now, what he means is the one-page form to borrow money out of his IUL policy. Now, he's technically not borrowing money out of his IUL, even though that's what they say. He's borrowing from an insurance company, and he didn't have to qualify for the loan because he has millions in the policy. So he said, I need $1 million and send me the form. So I send him the 8.5 by 11 form, and he puts his name and his policy number, which is like an account number. And it says, do you want to withdraw $1 million out of your policy, or do you want to borrow using your policy as collateral? What do you think he checked? I want to borrow. And then it will say, do you want to borrow at 2%, and we'll credit you 2% on that money, so it doesn't cost you anything to borrow? Or do you want to borrow at a little bit higher rate, and your money inside your policy will continue to be credited with whatever the index does this year? That's the one he chooses, unless we're in the middle of a recession, because that's what I do. He's savvy. He understands this. This is what happened. In 2017, he borrowed $1 million on the index loan. They charged him 5% interest. He doesn't have to write out a check for 50 grand at the end of the year. That's automatically deducted out of the interest that he earned. I don't care if he didn't earn anything that year. He didn't have to write out a check. It's all done internally. But in 2017, he capped out at 25%. He got credited $250,000 on his IUL, on that million. So let me make sure you understand what I'm talking about. He made 250 grand on this million that's collateralizing the loan. They subtracted the 50 from that 250. He netted 20% tax-free, or 200 grand on his million, while he was technically using that to make $3 million buying, fixing up, and flipping a strip mall. Are you getting it? This is how savvy people become their own banker. So if you want to learn more about how you can do this, if you're a business owner, I would strongly recommend you study examples like this in my book, The Laser Fund. This is actually 2 books in one. It's been flying off of our warehouse shelves. It retails for $20 up to $60 on Amazon. If you buy it on Amazon, thank you. But I'll gift you a copy free. Simply go to laserfund.com or click on the link below. And when you go in, you contribute a nominal amount towards the shipping and handling. I require a little bit of skin in the game. I'll cover the rest of that cost and I'll pay for the book. I will fire out a hard copy to you via priority mail. And if you're a left brain learner, I would recommend you read this side. This is 200 pages with 14 chapters, charts and graphs and explanations. If you're a right brain learner and you learn more by stories, you can just flip it over and read this one. About 100 pages, 12 chapters with 62 actual client stories. If you want to use your whole brain, then you can read both of these books, okay? Now, while you're in there claiming your free copy, if you like to listen and learn or watch and learn, there's those formats available for your investment. But you can schedule to attend a free educational webinar that we do every week with no charge. You can even schedule an appointment to talk to an IUL specialist to see how a properly structured max-funded IUL can perform as a dream solution for all kinds of goals, such as a working capital account for you and your business.